Hello, friends. How are you doing? Oh, nice to see you back. Now we are going to work out an example for funds flow statement. We have already done with the theory part, and we have seen working capital changes and funds flow statement, funds from operations. Now we will have to work it out funds flow statement. So come with me. We'll work it out. Okay. This is the company XYZ. So 2 years has been given, 2 years balance sheet particulars, 2022, 2023. Okay. So this is liability side and this is asset side. Okay. So now as I told you, we'll have to find out first the schedule of changes in working capital. First step we have to do. Last time we worked out no example. So I have classified what are the current assets, what are current liabilities. Okay. So I have taken this as a current assets, this debtors current assets, cash current assets, bank current assets. Okay. So these are the current assets. What are the current liability? Bank loan, short term, no, this is short term. So you have to take it as current liabilities. Then Sunday creditors, we are taking as a current liability. This provision for taxes, we are not taking it. We'll be seeing in the funds from operations. Okay. So now I'll have to formulate, I'll have to tabulate in the column current assets and current liabilities. Okay. So 2022, you see the current assets stocks, CA stocks 1,10,000, then 79,000. Okay. Then debtors 90,000, 16,900. Okay. Then current assets 6,800. Okay. Bank this year to 8,000. So total current assets is 2,06,000, 1,57,500. This is the current assets. Then what are the current liabilities? You can see current bank loan. So bank loan, they are saying the bank loan year 80,000. This year is not outstanding. Sunday creditors 1,60,000, 1,60,000, 1,40,200, 1,40,200. Okay, total it up. Don't close decrease, increase. That will be confusing. I'll just tell you very simple way. Don't put plus, minus, decrease, decrease, and it will be always confusing because you have to put some figures in ulta, in opposite direction. So instead of it, I'm just telling you, you easily understand this. So total 2,06,000 in this 2022. Current liability is 2,40,000 rupees. Okay, just see only this side, this side. Okay, first I am seeing only 2022. Just be with me. Okay, it will be easy to understand. So 2,06,000 is current assets, total current assets. Whereas current liability is 2,40,000 current liabilities. Okay, what the proprietor has done it, what the company has done it, they diverted, taken this money and used for some other purpose, a long-term use. So what's the gap? The NW means margin. I already told you. So if they bring the margin, it will be more and it will be less. Okay, just remember, if they bring the margin, because they are buying, they are bringing their own money from their equity long-term sources to build up current assets. So naturally, this will be more, this will be less. Okay. In this case, what he has done it is, suppose what actually he has done it, he has sold the stocks. Instead of paying to bank loan and creditors, he has taken the money out. Again, book dates, they have received the money. Book dates, your debtors would have paid the money. But instead of going and adjusting the bank loan or Sunday creditors, he has diverted for building or some other purposes. But it is not good. We should not do it. But he has done it. So as a result, his margin has become negative. Negative means he has taken the money out. He has taken the money out. That's why current liabilities are going up. Instead of paying to current liabilities, he has taken it 35,000. He has taken it out for building for long-term use. We should not do it. Short-term funds should not be used for long-term uses. This is the universal law one should follow. I'll tell you afterwards when I talk about the current ratio, etc. Ratio analysis. That time I'll talk in detail. Now it is enough. So 34,000. Okay, this is the first year. This is what they have done it. So he has taken the money out. So in this case, what about second year? This is more. Current assets is more. Current liability is less. So he has brought in 17,500. That means this is more, this is less. That means he has brought in additional money here. He has brought his more contribution here. So what happened is, besides adjusting the 34,000 which he had taken last year, he has brought another 17,500. That it means. Am I right? Are you with me? See, besides taking this, besides bringing this 34,000 which he had taken last year for other purposes, he has brought that also, and then he has brought additionally 17,500. That's why it's become plus 17,500. Okay, that's why it's become plus 17,500. So just find out. So this what our total amount is brought in. He has brought in to build current assets, to buy stocks. Or what is that? 17,500 plus 34,000, 51,500 he has brought this year, this 2023, to make good the negative contribution. So 51,500 stock has increased to that extent. Stock has increased to the extent. When the current layer assets are increasing, it is a use. It is a use. You got the point? So 34,000 he has taken out last year. Now it has become plus 17,500. That means besides bringing 34,000 to make it positive, then he has bought additionally 70,500. So add this to 50,500 is an increase in the working capital, increase in current assets, which is a use. When current assets is increasing, it is a use. When current assets is decreasing, it is a source. So it is a use. So you have to funds flow statement, you have to show it as a use of 51,500. So just remember this figure, 51,500 is a use. Funds flow statement, you have to show it as a use. Okay, then we'll try to now we'll switch over to funds from operations, how to do it. Okay. Now we have seen the working capital changes, 51,500 is a use because increase in working capital changes. So naturally it's a use. Decrease means source. Okay. So now we have to find out funds from operations. Second step. Already told you, no. So first thing is depreciation return of 15,000 in 2023. 15,000 rupees for depreciation was written there. So there's as such a clue that 15,000 is to be added to the net profit. Already discussed. No, it's a non-cash item. That is the thing now. Now we'll just open the account and find out what is if you made any purchases. Unless you open the account, you can't find out whether any make purchases, because opening balance, closing balance was given there. Plant. Okay. So now plant and machinery opening balance is 1,75,000. Okay, now written there. So this is a debit credit. Okay. Then second, depreciation, how much written there? 15,000. Okay. What is the closing balance? Closing balance actually will come in the year only. 1,90,000. What is the total? 2,14,000 is the total. So what is the balancing figure? If it may not made any purchases, this should tally. So closing figure has been given, depreciation has been given. So totally 2,14,000. So it is, but it is on the other hand, debit side is only 1,70,000. So they made a purchase of 39,000 machinery, new machinery, to the extent of 13,000 was purchased. So two things are involved in this case. First is purchase 39,000. It is a long-term use. Okay, first. Second, depreciation 15,000. So it will come figure in the funds from operations written there. These two are there. Okay. So this is taken care of. Okay. Dividend 22,000 was paid. So that is there was no other thing as there. So this is only use, long-term use. You will take it as a use. Okay. So now again, IT provision made during the 30. They made a provision of 30,000 during the year provision. So here you have to take a provision account is given 30,000, 35,000. Okay, 30,000, 35,000. So provision for tax, let us see. First is it is a balance. By balance, actually it is 30,000. So it is always, provision will always show a credit balance. Credit will be always more, and as you make the payment, it will get wiped off. Okay. So by balance is 30,000. Okay. By balance, opening balance is 30,000. Provision for tax. Okay. Closing balance 35,000. So you have to show it as a 35,000. Okay. So now the tax paid. tax paid actually they have not shown anything else. Okay, so P&L account is 30,000. So my balance is closing balance is 30,000. So opening balance is 30,000. So closing balance is 35,000. They have paid a tax to the extent of 30,000. So they have paid a tax. So to the extent of 30,000. So that means 30,000 paid to the debit of profit loss account. Okay. So balance is profit account to the pay 30,000 they paid. So opening balance is given there. When you pay that P&L account, they pay to the debit of profit loss account. So 30,000 they have paid. Tax IT provision made 30,000. Okay. So tax paid 25,000 they are given there. Tax IT 30,000. Then again, so we have seen the working capital changes. Now the thing is working capital changes 50,500 is a use. We already discussed that. So now we have to next second step is we have to go to the funds from operations. So funds from operations actually you see there is a depreciation rate. 15,000 depreciation was made. So depreciation was written off 15,000 in 2023. So now what happens is we have to open the account where there is any purchase made. So purchase means it is a use. Sale means it's a source. Okay. So in this case, purchase plant and machinery, just plant and machinery 1,70,000 opening balance. So by depreciation 15,000 paid, so it will come in the credit side. Okay. Then closing balance is 1,19,000 will come here. Totally 2,14,000. But it is not telling it is 2,14,000. There is a gap. That 39 there's a unless this balancing figure. So unless you fill up 39,000, it will not tally. So 2,14,000, 2,14,000. So 39,000 they made a purchase. That is whenever they make a purchase, the plant and machinery will be debited. That you know already. So purchase is 39,000. So two transactions are involved. One is purchase, long-term use. It will find the file place in the funds flow statement. And a depreciation 15,000, it will come appear in the funds from operations. First, there will be each one there will be some two aspects. So this is it, we note it down. When you work it out, we will just find out. Then provision for taxation. So provision for taxation actually you see they made a provision during the year 30,000. So they made a fresh provision in the doing able. So 30,000 they have made a fresh provision 30,000. Okay. So opening balance 30,000. Okay. So provision fresh provision is 30,000. Okay. This is 60,000 total balance. So what is the balance? Closing balance 35,000. So what is the difference between this? Tax paid 25,000 tax paid. So closing balance, the opening balance 30,000. They made a fresh provision 30,000 during the year, 30,000, 60,000. This side is over. The other side, balance is closing balance you have to put here only. So closing balance you have to put is 35,000. So what the balancing figure is 25,000. The 25,000 is nothing but tax paid during the year. So there are two things are involved. One is tax paid 25,000 long-term use. Then again provision 30,000. It will appear in the funds flow, funds from operations. You understand this? These two are involved. One is the tax paid 25,000 long-term use. We will show it as a use. Just find out. Just remember this. Then again, a provision for the fresh provision made is funds from. It will be showing as a funds from operations. So this provision is that we have to adding back to the net profit to find out the real funds from operations. We are not taking as a current liability. We are taking in this case already I discussed with you. Already told that it will be because it is paid from the profit. Profit is a long-term source. So naturally, tax also long-term use. That's why we are not showing as a current liability. Already told. And the treatment you can make either you can take it as a current liability. Also, it's not an issue, but treatment will be different. So it is finding a place here. So these two are involved. Now you got the point. Now you understood this. Then we will find out the funds from operations. Simple thing. So the funds from operation. We have to open the closing closing balance of profit loss account. What is the closing balance here? Profit loss 31,500. 31,500 is the closing balance. Depreciation 15,000. You have to add back non-cash item. They again provision for tax 30,000. You have to add back. Then again general reserve. You see the general reserve. They have made additional thing here. Opening is 50,000, whereas this is now 65,000. So opening is 50,000. So 10,000 they have increased it. They have transferred 10,000 as an entry from the profit loss account to general reserve. It is a non-cash item, but we have reduced the net profit. That's why we are adding back. Already discussed in the funds from operations. So this is 10,000. Then dividend, again, how much dividend was paid? 22,000. Already told dividend is we are taking as a long-term aspects only. We are not taking coming into the short term. Already discussed with you. So this 22,000 we are adding back. Though it is debited to payable account, that's how you are adding it back. So total how much is 77,000. Okay, the total balance 1,08,500. Of this closing balance, you have to reduce it. Sorry, opening balance, you have to reduce it. So what is the opening balance of P&L account? 31,000. So reduce the 31,000. You remember the funds from operation I discussed with you, no? I already told you, you remember that. Very easy. So total funds from operation is 77,500. So you have to make these adjustments to arrive at this figure. Be very careful in your exams also. So depreciation, provision for tax, again, then general reserve, dividend. So 22,000. Dividend we are taking as long-term accounts. So we are not, we are adding back. So in funds flow statement, we are showing as a use, long-term use. Because profit is taken as a long-term source. So dividend is taken as a long-term use. That's why it will be finding place in the funds flow statement. Okay, now we got the point. So total operations from funds from operations 77,500. So already returned. It is a source. It is working capital change is a use. We already worked out these two. Now we'll having worked out this. Now we'll work it out the funds flow statement. Now we'll have to work it out funds flow statement. We have worked these first two steps, working capital and the funds flow, funds from operations. Okay, these two are, this is a source, this is a use, 50,500 we have worked. Now we'll have to find out what is the share capital, they have been increased from year to year, share capital. So it is source, 50,000 has increased. You have brought in equity to the extent of 50,000. So you can do it like that, equity 50,000. It is source. Okay, got the point? Very easy. There's nothing to worry. Okay, 50,000. Then again, we'll have to you have to find out each from sources. Funds from operations. Already told it is a source. Funds from operations 70,500. Okay, got the point? Okay. Now, sale of land. They are saying you just find out a piece of land sold during the year at cost. The whatever it costs, it is not neither loss or not the profit. So what the land you just find out 2,25,000, 2,15,000. So how much it has gone down? So 10,000. So 10,000 land has been a piece of land sold for 10,000. So when you sell the land, money comes in inflow. It is a source. So sale of land sale 10,000. Okay, got the point? Okay. So this is the one side. The other side, already told, purchase of land. Already we have discussed purchase of land 39,000. We have arrived at in the plant and machinery. Okay. So purchase use. Purchase of land. How much is that? 39,000. Okay. On the point. Then tax paid. How much is there? Tax already we have worked out in this. It is how much is the tax paid? 25,000. Tax paid. Already we already you see that where we worked out tax paid we already at 25,000. So you must be, you can go back and see, and it is there 25,000. Then again working capital changes 51,500. Okay, so got the point. Then again dividend paid 22,000. Okay, dividend paid 22,000. Okay, so what they total it up? You just total it up. So 1,37,500. 1,37,500, 1,37,500. So always you should tally. Sources are always equal uses because based on double entry system. So it is simple. I'll just once again, just you have to analyze each this also. You have to when you have to go analyze each balance liabilities and assets. Then you have to find out. So in this case, equity, you just take a equity, 2,50,000, 30,000 is there. So there is 50,000 is the equity. Okay. Then again, funds from operation already were worked out 70,500. Okay, this is a source we are at. Land sale already told you. Piece of land sold at cost. What is the land is 2,25,000, 2,15,000. It has come down. So 10,000 value of land has been sold. So it has come the 10,000. So this is the one side source. How would they use purchase of land? So already we have a purchase of plant. Purchase of plant. We already worked out now. Plant. Purchase of plant. Purchase of plant 39,000. We already arrived. Plant and machinery we already arrived. Balancing figure. What is the depreciation? And then we have arrived as so balance purchase of plant is 39,000. Okay. Tax paid we have already arrived in the account 25,000. Then working capital changes already we arrived 15,500. Dividend paid 22,000. Dividend paid we are not taking as a current liability, we are taking as a long-term use, already told you. That's why it is there. So totally 1,37,500, 1,37,500. This is the more total funds movement position for this year 2023. So this is how you have to arrive at the funds flow statement. So we have to survey. In case when there is any such narration, better open the account. Better open the account and find out what has happened. So there is any gap between the balancing figure. You have to fill it up and you have to accordingly treat the whether it is inflow or outflow, whether purchase or sale, whether paid or received. All these things will come while opening the account and you can arrive at the things. So this is how you have to arrive at the funds flow statement. I hope you have understood what I told you. So it's very easy. So first you have to work it out the changes in the working capital. Then you have to arrive at the funds from operations. While funds from operations, and then we'll have to before funds from operations, you have to work out certain changes. They give some narration like that. You have to work out the concerned account. There will be two things are involved. I already told you that purchase. Then one is in the long-term use, other is in the funds from operations. Like that, you start writing like the 1, 2, 1, 2, 1, 2. You will never miss it. Then you can put those things here. So already while income provision for taxation, what I told you. For example, provision for tax, I'll once again I'll open it. I'll just open it and tell you. So you will understand this. Provision for taxation. Okay, so just for example, I'm telling. Provision for taxation. Okay. So provision for taxation, debit credit you have to analyze. So debit credit. So provision for taxation always it shows here credit balance. So opening is 30,000 by balance. Okay. Then they made a fresh provision. Okay, 30,000 by balance 30,000. Oh, got the point? So 60,000, this is the credit size is over. Now what they are saying is that the closing balance is 35,000. So closing balance always come in this side to close it. So to closing balance 35,000. So 60,000. Okay, this what is done in the gap? The gap. This is tax paid. Tax paid 25,000. So in this case, already I'm just repeating it. In this case, there are two things are there. The one is tax paid. Long-term use. Okay. Then what is the provision you have made? The provision you have made is 30,000. So 30,000 your provision is made, you have to add to funds flow statement. So provision, fresh provision 30,000 you have made. So you would have paid to the debit of profit and loss account. Okay, the provision, this provision has come with fresh provision. But the debit of profit and loss you would have given it here. So now since we are not treating as a current assets, non-current accounts, so what you're doing is provision for 30,000, you have to add back to the net profit. Already discussed. Okay, profit loss. This is funds from operations. So while putting funds from operations, this is all included here. Okay, plus minus. Okay. Then long-term use. What is long-term use? 25,000. You see here, tax paid 20,000. Okay. Got the point? So it's very easy. Don't worry. Just work it out. Just small. They have the narrations. Just go to open the account, open it, find the balancing figure accordingly. There will be two things always in involved. Whenever you make a change, there will be two things will be involved. One is related to funds from operations. Other is related to long-term use or long-term source. Okay. So I hope you got it from me. So wish you all the best, friends. Take care. Till we meet again in summer sessions. Take care. God bless you. Thank you.